Hello, I'm Raymond. This is officially my first video with you guys, and will be a brief introduction of what I am and what I'm going to share in this channel. So, firstly, I will touch on some investment knowledge that I gained through my investment journey. So today I'll talk more about the best index fund investing strategy. So if one company in basket has a very bad year and it barely moves the middle because you own hundreds of others too. Second is a very low cost. Most index fund ETF are run passively, meaning there's no expensive fund manager or picking stocks, which help to keep the fee very low and often a fraction of a percent per year. And lastly, simplicity. So you don't need to research on individual stocks or company. You are betting on the overall market going up over time, which historically it has. So I'm going to talk about a quick comparison between ETF, mutual funds, and also stocks. Because a lot of people might actually mix all these up. A single stock is that you own one company, you'll be exposed to a very high risk. No doubt it's also high potential reward, and also there's no built-in diversification. A mutual fund is like similar to basket theory, but usually buy once at a day at a set price and often through an application process, sometimes with a higher fee and also a human manager making the calls. An ETF lastly will be the same basket idea as a mutual fund, but it trades live on the exchange as stocks, usually with a lower fee and no minimum investment beyond the price of one share. So there are different type of ETF, and not all the ETF are on the same basket. So some common type are broad market ETF. It actually trades the entire stock markets like the S&P 500, what I mentioned, or even like total world index. A sector ETF focus on only one industry like technology or even healthcare. Bond ETF, basket of government or corporate bonds generally have a lower risk and also low return. And lastly, with the dividend ETF, we focus on company regularly payout cash to shareholders. So I believe for most beginner, a broad market ETF will be a more safe and will be a more simpler starting point because it is already diversified across the entire economy. So how to actually buy one? So first step will be you need to open a brokerage account, and for myself I will be using Moomoo, and this is the platform that I can use to buy and sell. And step 2 will be searching the ETF in the Moomoo itself, like using like a short code, and decide on how much you need to invest or how much you want to invest and place the order just like buying the stocks. So the boring part, but which is the most important part, will be holding, because ETF are built for long-term investing, not on day trading. So the real gain typically comes from staying invested over years and not just weeks. Yeah. So ETF doesn't magic. They still go up and down throughout the entire market. So if the market drop around 20%, your broad ETF will drop roughly 20% too. But the advantage isn't that ETF avoid risk, but it is that they spread it out, so no single market can actually wipe out the entire ETF. So this is why they work best as a long-term tools and not a quick win. Yeah. So that is the core of it. So one purchase, high-value companies, no fees, and one time doing the heavy lifting. So if you find this useful, to remember to subscribe, follow, and link in the description will show more information of how everyday investing actually works. Thank you.